Now, what happened was I received a request from one of the elite members. We wanted me to review a property package that he had sent in. Now, the deal with this was that I had asked him. He had a couple of properties that he wanted me to look at, and I had asked him to be more specific, just so that I could make sure that, you know, he sent over a couple of properties. I want to make sure I use the one that he liked the best to use, and this is the one that he sent over. Now, in the interest of full disclosure, I am going to say that, and he's on the line, but he can't talk right now, I'm going to say that I asked him to send me the properties. I did not know which properties he was going to send me. I did not know what deals that he was working on, and I specifically said, out of the ones that he sent me, which one do you want to work with? And this is the one that he chose. Now, I know that sounds like your typical magician saying, like, you know, we've never met before, I don't know anything about you, but you'll see as we go through this analysis why I am making this disclaimer early on in this conversation. Okay, so the name of the property is Bayshore Palms. It's located down in Safety Harbor, Florida. And right now it's being listed by Marcus and Millichap. Now, Marcus and Millichap, obviously, we're talking retail sales here. This is going to be, you know, they're trying to push this property to get the biggest number they possibly can. So right away we know that they're looking for retail. We're not going to provide them retail. We're going to give them the number that that works for us. But let's take a look at this property. Let me just slide down here. Okay, you know, they put the best pictures. Obviously, a crystal pool. Unless if there's water in it, it's always considered crystal. You see more pictures here. Things I look at: flat roof. You know, separate entrances into the units. Easy to see who's living there, who's, you know, nobody's hanging around. I do not see any in-wall air conditioning units, but I'm not seeing the back of the building either. That might be part of the problem. Now they've got this, you know, their table of contents. Here's some more pictures of it. It's all looking the same. And I can tell you, folks, you know, after a certain amount of time, all these properties start to look the same. You know, it just dawned on me. One thing that's missing from this particular property is this property package. I don't think I've seen any interior pictures. That's kind of strange. Now, let me just talk to you about this executive summary. This tells me a little bit more about the property. They're telling me, first off, that it's a value-add proposition, all right? So that means that they're wanting me, they're saying that the benefit to this, owning this property, is you're going to add value to it, and that's what's going to increase the property. They're saying that the rents are below market and there needs to be some strategic capital improvements. So, you know, we're talking about a property that requires more work than usual. So you've got to ask yourself, is this the type of property I'm looking for? Am I looking for a value-added property? If I'm bird dogging or wholesaling, do I have buyers who are looking for value-add properties? And the fact that it's owned, that it's listed by a broker means you're not really going to bird dog this deal. You're more likely going to wholesale it. Now take a look over here. Market bid. Why did it say market bid when it talks about the proposed price? Because they don't know how to price it. That's a problem. They can't set the NOI to the right number to get the price that the seller is looking for. And, you know, guys, I see this all the time, especially right now out in Phoenix, that, you know, that they're letting the market determine the price because you're getting a lot of, and I don't mean to offend anybody, getting a lot of stupid investors out there who are just walking in with a big checkbook and able to buy this thing without giving it a second thought. Now, I don't want that to be you, but a lot of these brokers, that's what they're looking for. All right, so the number of units, 200 units, rentable square feet, 12 buildings, all 2 stories. Now look at this. It was built in 74. Built in 74, so you know we're talking about a C-class property. And with a C-class property, obviously your repairs and maintenance is going to be higher. Your payroll is going to be higher because somebody's going to do all those repairs and maintenance. And then your delinquencies are going to be higher because you're dealing with a lesser quality of resident. So you're looking at a C-class resident. So those 3 things on your profit and loss statement on a C-class property should be higher than normal. When we use the rules of thumb, we're going to look at those numbers and use the higher range of the rules of thumb. We'll get to that in just a moment. Let's see, gross potential. Now, just here's what I want you to do. make a mental note of this number right here. All right, make a mental note of the year zero, meaning this year, of the NOI at $708,000. So write that number down. We're going to come back to that number a little bit later on. But right now, according to the broker, the NOI is at $708,000. Okay, great. This is all I want to know on this particular page. Now we're going to spread on down. Let me just shoot back up here. Okay, hold on. Terms of sale. Property is being offered free and clear of debt. That means that there's no assumption necessary. You can bring your own mortgage to the table. Let me see. It's a fee simple interest, fee simple absolute. That means you are buying the whole entire property. You're buying all the mineral rights below it. You're buying all the property rights. You're buying all the air rights above it. And as long as you pay the taxes and the state government doesn't take it through eminent domain, you're going to keep that property for ad infinitum. Let me see. Timing. All offers must specify the amount of the type of deposit to be made. Okay, big deal. Now, let's go on down here to the property description. Now, this is where they try to put lipstick on a pig. And you guys don't know that this is a pig. I happen to know that this is a pig, and I'm going to show you in a moment. But the thing you want to look at is right here. Let me see. All right, that should. All right, here. Okay, check this out. Let me run through these things because this is all very important. And it's important for where the property is, the value-add proposition, but more importantly, it's also important for the profit and loss side of it. The buildings are comprised of 108 one-bedroom, one-bath out of 200. So you're heavy on the one-bedrooms. With 650 rentable square feet, so it's a smaller size. Then you get 62 in ones, and you've got 32 two and twos. All units have central heating and air conditioning, and the building sits on a 9.28 acre parcel of land. Central heating and air conditioning. Now that could mean that the building has a chiller boiler. It could also mean that each unit has central heating and air conditioning. That I wouldn't take that statement at face value. You'd have to dig down deep and find out exactly who's paying for what, okay? Amenities include 16 on-site laundry facilities. So that tells me that there should be laundry income on the profit and loss statement. But think about this for a second. 16 locations? 16 individual sites for laundry? That sounds crazy to me. I mean, typically I have maybe 3 or 4, but but to have 16 different sites, I wonder if we can change those into units and congregate the laundry facilities in fewer locations. Now, approximately 170 of the 200 units have been updated with ceramic tile flooring. That's good. New tile countertops in kitchens and bathrooms, as well as resurfaced bathtubs and new tile shower backsplash. Additionally, select units receive new kitchen and bathroom cabinetry and new white appliances. How many units got that? Select units got that. Well, what are select units? Why didn't they tell me how many units received new kitchen and bathroom cabinetry and new white appliances? Because not many of them did. But only a select few units received that. So that doesn't really help you out all that much. In 2013, the property has updated the landscaping, renovated the office clubhouse, repaired the parking surface, and resurfaced the tennis courts. Now it says repaired the parking surface. It doesn't say that it resurfaced. Whoops. It doesn't say that it resurfaced the. It doesn't say that it resurfaced the parking lots, which would be great. They just fixed them. Okay, so now it says resident pays water, sewer, and trash based on a flat fee of $40, $50, and $60 for 1, 2, and 3 bedroom, 1, 1, 2, 2, and 2, 2, 2, 1, and 2, 2 bedroom floor plans. Okay, so if there is a separate fee for the trash, that fee should show up separately in the profit and loss statement. It should not be included in the rent. If it's a separate fee, like a pet fee, that's a separate line item. And if the guy did his books correctly, we should see that in there, all right? All right, that's all I've got. I don't care about the location. If I'm looking down this particular neck of the woods, whoops, hold on, folks. If I'm looking in this particular neck of bear with me here. Mine just went to a black screen. I don't think yours goes to a black screen when that happens. I think it's strictly mine. Let me just check right now, see if anybody has any questions. Okay, no questions, great. Now, okay, here's some more information about the property. You know, constructed a concrete block and 74 spacious rooms, 16 laundry facilities. You know, it just goes on and on with the typical stuff. Typical broker stuff. Let's go down here to, that tells me more about the area. I don't really care. But the thing is, if I do get this property under contract, and I am going to start to raise private money for this deal, and I need to put together an offering memorandum, where do you think I'm going to get all the information about this location? Right here. So this is great stuff. Now, I don't care about this. Take a look at this here. What information can we deduce from this? We already know all this. Parking surface is asphalt, interior flooring, ceramic tile, exterior. Okay, washer dryer connections, there are none. HVAC, once again, is central. Okay, now water and sewer, the resident pays. Electric, the resident pays. Waste removal, the resident pays. Gas, the landlord pays. Okay, so we are paying for all of the gas. Write that down as well. We're going to come back to that in just a moment. All right, next line. Here's some pretty pictures. Okay, look, we finally got an interior picture. And, you know, whoop-de-doo, they all look the same to me after a while. Let's see, there's the beautiful floor plans that they get to see. More of the town. There's the location. I'm not going to waste everyone's time on this. I really want to get down to the nitty-gritty. Now they start to give us the information. This is the first screen that I come to when I start to use the landlord cash flow analyzer, okay? So at the elite members, all get this software free within the first 30 days of their membership. They get access to this software. It becomes theirs. As I mentioned, I think this is the best software out there. But let me go through how I'm going to analyze this particular deal. First thing you do is you come to the input data screen, and I'm going to put in enter the rent roll. So here's the information that I get from that particular screen. Let me drop it down, slide it right over to here. As you can see, I got 1 bedroom, 1 bath, 108 of them, 650 square feet. Monthly rent is $725. Now you may be looking at this and say, no, Charlie, the monthly rent is $625. No, that's the current market rent. That's what they're getting right now. But according to the broker, next year, in year 1, you can get $725 per month. So look at what the broker has done. He has said that essentially you are so far below market, you can increase all the rents in this property by $100 per month. Let me stop you right there and tell you that if you're dealing with a C-class property, you cannot increase your rents by $100 a month. You will have everybody move out. They just don't make that kind of money. For some people, this rent of $825 or $725 represents almost 50% of their take-home pay. You go up by $100, they can't afford to live there anymore, and they're moving out. And when they move out, you've got to go in there and clean that unit and turn that unit and get it ready for the next person, and that costs more money. So when you look at a broker who thinks that he can go up on our C-class property by $100 a month in rent, they've never owned and operated a C-class property before, and I tell you, I have. And the increase in rents have to be incrementally smaller. $20, $25 is pushing it. I mean, that's how these people operate. So if you see this guy saying that it should be here at the $725, $100 more, well, that's the market. But in my analysis, I am going to use that number. 725, 825, 925, because I want to know what the gross potential rent is on this particular property. Then once we have that, then I scroll on down to the next page. All right, now here's more broker hype. All right, this is more stuff in here that just doesn't make sense, and you have to be able to look at this and think, this broker is blowing smoke on this one. Let me show you what I mean. All right, so I put into my spreadsheet, I'm going to blow this up for you, the rents where they should be. $1.888 million is what you could potentially be making on this property, all right? Now, according to the broker, last year, the effective rental income was $1.514 million. Okay, so he's saying that out of the current market rent of 1.648 down to what they actually collected is a vacancy number of 4% or 5%, that this property is only at 5% vacancy. Let me see a show of hands. How many people believe that? I didn't think so. All right, let me just see first off if anybody actually did raise their hand on that question. Let me scroll down here. Vance actually has a question. Oh, you did see the brief screen. Okay, thanks, Vance. I appreciate that. All right, so they're looking at a 5% vacancy. And I'm here to tell you that's baloney, okay? Because they are not giving me enough information on the spreadsheet in order to deduce what I really need to know. But take a look at this. Remember that number 1.514 million. For me to go from the gross potential rent all the way down to the 1.54 million, which is what they're saying is the actual collected income, I need to show a vacancy rate of 18%. Now keep in mind, folks, that 18% is not really all vacancy. Because of the way that this spreadsheet is set up, that 18% actually includes things like loss to lease, bad debt, collection number, economic vacancy, physical vacancy, managers' units, concessions. All of those things that go towards reducing the income are included in that 18% figure. But that's what I want you to see when you're looking at this property, that there's 18% potential income that can be increased in this deal. Or this guy is losing 18% of the income out there. Now remember, that loss to lease figure, that $100 per unit per year, that's huge. And you're not going to recoup that in a year. You're not going to recoup it in 3 years. That's going to take you 4 to 5 years to get that number back up to the market numbers. So that 18% vacancy is not something that you're going to achieve in the first year. All right. Then they have, if we look down here at his information, we have other income. And look at that, it's $60,000. I mean, come on, $60,000. It's how vague can you be? He doesn't tell me what that other income is. He doesn't tell me what it is, where it's coming from. But it just doesn't make any sense. But I'm going to include it in there. It could be laundry income. Now check this out. This is where it really gets interesting. Look at, he's got this utility reimbursement of, in the first year, 0. In the second year, $123,000. Okay, let's think about this for a second. What's that money? What utility reimbursement? Remember, the landlord's paying the gas. What this broker is trying to tell me is that in the first year, after the end of the first year, I'm going to switch all of my landlord-paid utilities over to tenant-paid utilities. Now, wait a minute here. Not only have I increased the rents by $100, now I'm getting the tenants to pay for their gas. It ends up, based upon these numbers, by increasing their rents by almost $150. That's almost 30% for the one-bedrooms. Do you think I'm going to be able to get that? Not a chance, especially if the market doesn't allow me to charge the residents for gas. When I say that it doesn't allow me, meaning my competition down the street is an all bills paid property. Well, if my competition down the street is an all bills paid property and I go to switch to be a tenant paid property, everyone's going to move up and move to the guy down the street. The market didn't allow me to do that. So you can't take what these brokers are trying to tell you at face value. Most of them have never run a property before. And I can tell you that no matter where you go, what I'm saying to you is pretty much par for the course. There's nothing new about this business. Once you get the hang of this business, it just runs the same all the time. Anyway, as I always say, this business, this business has been around since baby Jesus was renting a room at the inn. All right, so there's nothing new about this business. When you see these types of things, the broker's trying to blow smoke on you, it doesn't work that way. Man, I was on one of my clients, we were on a conference call with one of the brokers yesterday, and I kept asking him, trying to pin the guy down to a particular point. What he was saying was that if I increase the occupancy by 20%, it would change the cap rate by 3 points. And I'm trying to get this broker to say, how does reducing the vacancy change your cap rate by 3 points? He never could answer the question. And you know the guy's full of baloney because that's not how it works. So when we look at this utility reimbursement, he's trying to get it up to $123,000. As you can see, I'm just including this $5,000 per month of additional miscellaneous income into the calculations. I'm not including the utility reimbursement. That's bogus. That's money we'll never see. Okay, so on the rent roll screen, I've pretty much summed it all up. That's all pretty much how that is going to work on the. Let me just get this screen out of here. Okay, on the rental income side. Now let's go over to the expense side. Jump on over here. Now remember, this is a landlord paid, all bills paid property. They're paying the gas. It's a C-class property. And, based upon those numbers, what's the rule of thumb for the expense ratio? It should be in the 60s. And sure enough, and I'm going to run through these numbers with you in just a moment, it comes out to be almost exactly, it's 59.2%. So let's take a look at what they've got down here for expenses. They've got payroll. The broker puts the payroll in right now at $760 per unit per year. End of year one, he's going to bump it up to almost $1,000. I could not agree with him more. I like $1,000 number. I'm putting in $200,000 for the payroll, and as you can see, that's exactly what I did right there. No, that's not it. Where am I? Where am I? Payroll. Wait a minute. Where's my payroll figure? Maybe I put it in the wrong category. There it is, right there. $192,000. Okay. All right, so that's that. Let me jump back over here to this screen. Contract services, okay, fine. He keeps it at $40,000 between the actual and his pro forma. Repairs and maintenance, he keeps it $90,000. Fine, I'm going to keep it at $90,000. Now, I'm not going to dig down too deep into this. Obviously, you want to make sure the numbers look right, feel right. 60% expense ratio, I'm pretty much on the money. But when you go to do the due diligence, that's when you're really going to break down and verify all of these numbers, absolutely all. General administrative, $28,000. Marketing and advertising, that's pretty steep at $75. According to him, it's 5% occupied, 5% vacant, and he's looking to spend almost $75 per unit per year on marketing. Management fee, he's got it down there at $3. I bumped it up to $4. Telephone, $6,000. Okay, fine. Now check this out. This is kind of interesting. Look at the two numbers here. Real estate taxes are set at $147, and he's saying at the end of the first year it's going to jump up to $203,000. Now, why would it jump in 1 year by almost 25%? It's because the assessed value right now is 75% of what they're thinking the purchase price is going to be. So that's something you want to get on the assessor's website and find out what they've actually got this property assessed for. Now, keep in mind, you're going to have to understand how the Pinellas County Assessor's Office works. You want to know, do they set the valuations at market rates, or are they off by a couple of years? You really want to understand that type of information. But here, when the broker is using 147 the first year and 203 in the next year, you can be sure that my numbers are set at the higher figure of the $203,000. You're always going to be conservative. Insurance, they've got it at $500 per unit per year. When I saw that, my first reaction was, that's going to be a mistake. And then I had to remember, oh yeah, we're dealing with Florida. That's not a mistake. The Florida insurance costs are almost twice as much as the rest of the country. Now, Here's the utility expense, $190,000. It's kind of interesting that over here they've got the utility reimbursement income, $123,000. So I'm going to use that $190,000. I'm not going to put the reserves in because I'm just trying to calculate out the net operating income. In my calculations, the bank is going to include the reserves above the line. I include them below the line. I want it to be accurate. Okay, so fine. Now we're done. We've got the income and the expenses built in. We jump on back over here to the input data screen. I set it at a multifamily. Now, here's the price. Here's the thing. I come down here and I set the cap rate on this property at 8%. And I'll show you why I do that in just a moment. So I set it at 8%. When I set the cap rate at 8%, based upon the NOI that we've just calculated, the valuation of this property is $8.204 million. So then I jump back up here and I put the asking contract prices at $8 million. That's what I would offer for this property. I'd probably go a little lower, but I would start at the $8 million. And then once I go through the due diligence, if it doesn't pan out, I'm going to come off my price. All right? So I put in the 25% down, 4.25% interest rate, 30-year amortization, $6 million loan. Okay, that's on my financing information. Great. Now, how does this deal look? Let's go over to the cash flow analyzer. And on this particular deal, right away, my debt coverage ratio is 1.85. That's my sleep number, 1.85. What a great number. I'm going to sleep very nicely with a 1.85. Check out the cash-on-cash return before taxes, 15%, 16, 17, 18, 19, 20, 22. Okay, at $8 million, based upon this number, this looks like a pretty good deal. All right? But remember, we're dealing with brokers. And as I said at the beginning of this conversation, the elite student who is on the call, he and I did not discuss this property, and I did not tell him what property I wanted to analyze. Out of all the millions of properties all over the world, he picked this one. And as I started to put together this cash flow analyzer this morning, I thought to myself, geez, this property sounds really familiar. Wait a minute, let me just do a search in my Outlook. So I typed in Bayshore, and sure enough, I have seen this property before. And for those of you that know me and you come to my sessions, you know that I enjoy my Friday afternoon lunches down at my favorite restaurant. And when I go there, I have a usual crowd of people. One of the guys that's there is a big real estate developer down here on the South Shore of Boston. He said to me one time, hey, a friend of mine's got a property down in Florida. Are you interested? I said, yeah, I'm always interested. What has he got? And he sends me over this property package. Bayshore Palms Apartments. Look familiar? Well, it should. It's the exact same property. But you would never know that by the financials. Remember what I told you? Remember that number? I wanted you to keep in mind that NOI number at the beginning of this discussion. It was about $700,000 is what the NOI was per Marcus and Millichap. Now, this property package that my buddy sent me, only like six to 9 months old, okay? This guy, Tim Kane's a friend of his. And so Tim Kane was trying to sell it, going through it, looking at it, it's got all the same stuff. But I'm going to draw your attention down to one particular thing. Look what happened to this property after 6 to 9 months. Here he's got the rent comps. Take a look at the financials here on this property 6 months ago. According to them, the annual net operating income 6 months ago was $1 million. According to Marcus and Millichap, the NOI is $700,000. You can't believe a word these brokers are telling you. You got to go out there and figure it out on your own. Now take a look at, you wonder why I was using an 8 cap? Because look at, they're using 6.5, 7, 7.5 down here. So I dug a little bit deeper. I'm thinking this property is more in the 7.5 range. But then I decided to do a little bit more investigating, and this is where I went back to my friend at the restaurant, and I said, "Hey, this property is not what you told me it was." He goes, "What do you mean?" So what I'm going to show you here is apartmentratings.com, Bayshore Palms, formerly Philippe Landing on Philippe Parkway. Let's take a look at some of the things. Do not rent here. I had rats and infestation, and management did nothing about it. While we were living there, 3 meth labs in the apartments. The police shut down and arrested residents of the apartment. You think you're going to get a 5% vacancy number on these types of residents? These are the dregs. These people don't pay their bills. Your economic vacancy is going to be a heck of a lot more than 5%. I mean, let's see what the next person had to say. Who loves this property? Wow, I am so shocked. Just with looking at the pictures, it looks like it's a total dump, and that's a shame. I was looking for pictures to show my daughter of the apartment that her dad and I used to live in when we lived in Florida. Granted, it was about 15 years ago, but I figured that for a place that used to be so beautiful, how much could it have changed? Well, I am floored. Whoever is management should be totally embarrassed of the pictures I just saw on this website. I didn't even show my daughter because it looks like mom and dad lived in the ghetto. Okay. You getting the drift of this, folks? This is a tough property. Do you think Marcus and Millichap was out there telling you that it was a tough property? Heck, no. Are you kidding me? It passes that part of the test where it says, you know, I mean, would you want to live there? Look at that. I'd want to live there. That looks beautiful. Looks like I'm down in the Caribbean. But then you read the information on there, and it's not a nice property. So what do you do? What do you do? You know, you just spent all this time working on this particular deal. It's interesting that Marcus and Millichap, it's not even, I think there is a team on this, Marcus and Millichap team, but their names do not appear anywhere on the on this property package, probably because they don't want to be associated with it. But, hey, all right, so what you do is you come on over here and you draft your letter of intent. I mean, you just spent an hour looking at this deal. You want to start to build a relationship with the broker. You don't want to just take this and toss it in the trash heap. You want this broker to talk to you, to look at you as somebody that does something, that actually does more than just you know, asks for emails with property packages attached. You actually put together an offer. So here, I just pulled out the short form LOI. It's on the Resources and Archives section of the Elite program. So you can go on there and you can download the short form LOI. This one is a straight up, no big deal. In this particular deal, I'm saying $8 million, 1% earnest money, 20 to 25% down. Inspection period, I asked for 45 days. Earnest money deposit, 3 days after the receipt of all the documents in Schedule 1. I mean, so it's just a very, very simple LOI. And you just throw it on your letterhead and shoot it on over to these guys and say, I'm interested. Now, they're going to come back and tell you, well, no, $8 million, we've already got all cash offers, no contingencies at $9 million. And then you say, hey, best of luck to you. But when that one blows up, come back and talk to me. I mean, maybe my 8 might still stand. It won't. You'll be down to 7.5 by that point. But that's how you get these deals done. That's how you get into this business. You start to build relationships. So because I've spent this amount of time on this particular deal, I would send out an offer. It might not be what I'm looking for, but I might have a wholesaling client that wants exactly this type of deal. And if I can get it under contract, then boom, I can make some money on it. So that's how you look at these property packages. Nice and easy. Sign your name, purchaser acknowledges by seller, and you're done. This one doesn't have the Schedule 1. The templates on the archive section for the membership site do have the Schedule 1 on the letter of intent on there. So that's it. That's it. I just looked at this property. As you can see, brokers lie. You don't believe anything they tell you. You always got to verify for yourself. Go back in there. There's so many sources on the internet. You can. I mean, one thing that you might want to do is go in here and take the you know, take this right here. Let me try this with you. Hold on one second. Let me just bear with me, folks, because sometimes this is a fun thing to do. Hold on one second. Let's jump on over here to the right screen. And we got a question. Let me just check the question here. Let me just check. For some reason, the question's not coming up. Hold on. Oh, I must be looking at the wrong place. Okay. I see that there's a question on the screen. If anybody else has any questions, just go ahead and type them in, and I'll be right to them in a second. So what you do is you copy the address of the property and just type it in. Directions, Trulia, LoopNet. Oh, so it's on LoopNet. I wonder what LoopNet says about it. Let's see. No, it's not giving me anything on it. But yeah, you definitely want to go check LoopNet to see if this is on LoopNet. I'm sure it is. Marcus Millichap that has a listing. But what I'm looking for really is any bad news about this property. You know, typically, what they might do is they might put, you know, if there was a murder, there was those three meth lab things that might be something you want to look at. Yeah, so this is not really giving me anything. It's too bad. All right. No, not telling me anything. All right, so let me go and see if I can pull up these questions. Trying to figure out why I can't. There we go. There we go. Yeah. Okay. It was not a question. It was a statement. Wow. Yeah. So, okay. Patrick says, where do you think the best place to get deals, build relationships with brokers? Yeah, building relationships with brokers, absolutely. Patrick, did you watch that, the lesson one? I went to, in the lesson one of the master class, I went through a whole bunch of different places where you can find opportunities on the internet. Now, no matter what I showed you on that video, it does all boil down to you picking up the phone and speaking to somebody on the call, you know, on the other side. You know, you're not going to do these deals in a vacuum. You've got to build relationships with these brokers and other people who are doing deals. That's the best way to do it. And you know, part of what a lot of new investors' problems are is that they lack the confidence to speak to the brokers. In lesson 2, which is going to be posted in the next 7 to 10 days, lesson 2 is going to talk about, you know, how to find the deal that's right for you, how to find the properties that are right for you, and the subtitle to that is going to be how to create your elevator speech. Because what happens is the whole first lesson, I teach you how to find the deals on the internet, how to find the brokers, how to get in front of these guys. But when they start to call you back and you don't know what to say, well, that's going to be a problem. So lesson 2 is to take you to the next phase, which is to know how to speak to the brokers and know what to say when they start asking you the questions about what you're looking for. So that's the second part. That's lesson 2. That's coming up. That's going to be a great one, another long video. So, you know, I recommend you just bookmark these videos, come back to them often, you know, as I would do, set aside Saturday morning to watch them and then start to implement all the things that I teach you in those videos. But that's the whole point. So that's the deal. That's how you're going to look at these properties. If anybody has any other questions, if anybody has any deals they're working on right now, if anybody wants to be the focus of our next group coaching call in 2 weeks, let me know. That's what I'm here for. Yeah, okay. How do you suggest doing that? Needing a proof of funds. All right, proof of funds is the biggest scam going. I can't stand it when a broker asks me for a proof of funds. And I actually did it. I don't know, Patrick, if you saw a video, a blog that I did recently regarding proof of funds letter. Proof of funds, I think it's proof of funds letter. But the thing about the proof of funds is I used a Monty Python video in my blog post. Very funny. But that's basically how I look at proof of funds, almost in the same level as a Monty Python skit. Here's the thing. When you start working with brokers, brokers are trying to show their value to the seller. And one of the ways that they show their value to the seller is by putting up roadblocks, by vetting you out. Before you have the opportunity to kiss the ring of the seller, you've got to get through the broker. And the broker's putting up these human roadblocks in the way. And one of the human roadblocks is a proof of funds letter. And so he's going to try to vet you out by saying, well, before I accept your offer, I want you to provide me a proof of funds letter. And you're sitting there, if you're a new investor, you're sitting there thinking to yourself, I'm dead. I'm dead in the water. He just found out that I can't even get over the first hurdle in this business. I mean, I want to own apartments. I want to, retire in 10 years. I want to live a great lifestyle. And I can't even get over the first roadblock when a broker asked me for a proof of funds. Well, what I did is I pushed back on the broker. And I said, well, do you want a hard proof of funds or a soft proof of funds? And the broker's going to look at you like, wow, this guy knows what he's talking about. You say, and he says, well, I don't really know. Well, I mean, if you don't know, I don't know what type of proof of funds I'm going to give you. And a soft proof of funds is just a letter from a bank saying this guy's got a bank account with $500,000 in it. And it doesn't even have to be you. That's how stupid proof of funds letters are. It doesn't even have to be you. And that's the thing, is I got a guy with a $10 million bank account. He'll sell you a snapshot of his bank account for $500. There's your proof of funds letter. Cost you $500. But you've got over the first hurdle. Now that's if the broker comes back and says, no, we really want to see that soft proof of funds letter. Good, here you go. $10 million bank account. Are you ready can we move on now? And then the broker says, well, geez, I don't know. I guess we want a hard proof of funds. Well, a hard proof of funds is when it shows that you've got the money in your bank account. That's a hard proof of funds. Now, the problem with that is that if he wants a hard proof of funds, you say, well, how much for? Do you want it for the down payment? Do you want it for the full purchase price? How much do you want the hard proof of funds for? Well, I want it for the full purchase price. Well, you do know that my offer is going to have a financing contingency. I plan on financing this deal, and so I'm not going to have the full purchase price in my bank account. Do you still want a hard proof of funds? Yeah, I do. I want it for the full purchase price. Well, wait a minute. Hold on a second, Mr. Broker. What you're telling me when you ask me that is that this property is not able to be financed. What's wrong with this property? I thought this property could be full amount. Do you? No, I guess I don't. So what you do is you just push back on the broker, and you make him have to jump over blocks. Remember, he doesn't get paid until you close the deal. So he had better be willing to work with you. And understand that he's just there to be a human roadblock. You got to go over him. Don't let that guy get in the way of you owning your apartment buildings. That's the thing. That's the way you got to look at it. Think about it. You're going to be sitting on that beach someday, either collecting nothing more than a Social Security check, or you're going to own the beach. And the difference is because one guy went right over that roadblock and did what he was supposed to do. The other guy, hit the first thing and walked away. And that's what that's one of the things that. Oh man, I as a matter of fact, one person on the call today, one of the person on a phone call today was helping me with the subject matter of one of my last blog posts. The guy, the Winston Churchill blog post, where the guy got out of the business, decided he's not going to look for multifamily anymore because it's too hard. He said, well, what's so hard? Well, I need to get a key principle and I can't find one. Well, how hard have you looked? I mean, the guy has done nothing. The guy was always a naysayer. In every seminar that I ever went to, he was always a naysayer. But now he can't do now he's never going to own apartment buildings because he can't get over that first roadblock. That's such a shame. It's really, I mean, why? Why did you spend all that time going to weekend boot camps and trying to learn this business? And, if you're just going to give up in the first sign of struggle, nothing good comes without hard work. All right, now another question here regarding the single pane windows on Fannie or Freddie. What the question is, let me read it specifically, do you know if Fannie and Freddie requires single pane windows be changed to insulated? I had this question come up just recently, And I think what you're referring to is if you look at that particular property, it's all 1974 windows, all single panes. They're all ugly. They're all, they're all terrible. You got to change them all out. When you buy a property like this, you've got to have enough capital improvement money to be able to go change all the windows because it's just, those single panes are nasty. You see a ton of them over in anything built in the 1970s. All seems to have single pane windows. The question is, will Fannie Mae require you to change out single pane windows? The answer I got from a mortgage broker was no, they are not requiring that necessarily, but they do like to see that in there, and they tend to show it on the physical needs assessment. When they go to do a look at your property and they do a physical needs assessment, they'll take into consideration the replacement cost of all the windows. They won't require you to reserve for it up front, but they will want you to contemplate changing out all those windows. I can tell you from an ownership standpoint that's a good thing to do, is just having the money to be able to do it. Okay, so let's take another look here. Okay, is it if you use an average expense? And just want to, okay, this is a lot better. Yeah, okay. Okay, question is, when calculating the offer price in the cash flow analyzer, the software we just looked at, is it enough to use an average expense ratio for the given property class? For example, 66% for C class, 50% for B class, and just modify that expense ratio according to any special circumstances of the property. This is a lot faster than going through each expense line item on the trailing 12, or is it better to do both and then pick the higher expense ratio? Okay, here's the thing. I hate cutting corners when you're looking at a deal. If you're just looking for a quick down and dirty, yes, I would just use expense ratios based upon the rules of thumb. But if you're really analyzing the deal and you're interested in that deal, I want you to put every single line item in there. Because when you put every single line item in there, then you know what line items are missing. Like, in this particular example, I think one of the ones we looked at just the other day, for one of the elite students, it was missing the management fee. And if you just lumped everything together, you wouldn't see it in there. So I like to break it out, and I like to go through each line, line by line. And here's the thing, is that when you come to my due diligence seminar and you learn how to go through the due diligence line by line, you are going to know the financials on those properties better than the owner does. And you're going to need to know that information because you're going to be pitching your deals to your investors, and they're going to be asking you questions about the property, and you're going to know the answers because you took the time to understand each line item. So I don't like cutting corners, especially if you're new in the business. This is a great way for you to learn all the ins and outs of the financial statements on the properties, because that's the most important. That's 90% of this business, is understanding the financial statements on the properties. So I hope that answered your question. Let me move on to the next question. Okay. If you as members found a deal, could we add it to the class for review minus the address? Yeah, you can definitely, if you want to try to do it in an obscure way, so that nobody else can see it, and you want to get the analysis, absolutely. I will protect you and make sure that your deal is kept confidential. I want this group coaching program to be a place where you can come on board and get all your questions answered about any particular deal you're working on, and just shoot me emails beforehand, and I will work towards making sure that anything I post up here on the big screen is going to be kept confidential, so nobody else can figure out what deal it is. I mean, we might even need to change some of the numbers, just so that nobody can pick up on numbers, because some people do that. I tell you, it's so strange. The apartment building is so ingrained in me. I remember properties and the stories about properties more than I remember people or brokers or what have you. And it's kind of like my veterinarian. She knows the dog and the dog's name more than she knows the owners. I'm the same way with apartments. I just understand apartments. That's why when I saw this Bayshore, I thought, man, this looks familiar. I know this deal. And sure enough, it was the exact same deal. So I want this place to be this group coaching call to be a place where you can come and ask any questions about any deals you're working on. I will do everything possible to keep it confidential so that nobody can figure it out, but you do get your questions answered, because I can tell you, the questions that you're asking, everybody else on the call wants to know too. So don't be afraid to ask questions, you know, because you're going to get a much better education when you're asking the questions. So, all right, I think right now I've got all of the questions answered. If anybody has any other things going on, let me know. If anybody has any haves or wants, kind of like a RIA club. If anybody is looking for a particular type of property, if anybody is looking for a key principal, if anybody is looking for earnest money, if anything like that, just speak up. And let me tell a story before I hang up. And somebody on the call here that I just had this conversation with earlier. Okay, yes, you're looking for. Oh, I got somebody's on here looking for investors. So how can I? Okay, let me think about how I'm going to be able to get people out there. Maybe through the forums section in the on the membership site. But let me work on that as well. How I can get you all connected for looking for investors. Let me see. Okay, all right. That sounds okay. Vance, that's great. You and I are going to talk offline on that one. And then Patrick, this class will teach you how to become a syndicator. Yeah, the elite class. We have the Masterclass program, the Masterclass Elite. The Masterclass Elite program is the one with the private money tutorial. You should have received the first video for the private money tutorial. It's 6 lessons. All right, and that, I'm telling you folks, that private money tutorial is going to be like nothing you've ever heard before. Been to any of these Alan Cowgills or even Jillian Sidotes, those are all great, very technical, but those people have never put together a syndicated deal for themselves, where they've had to go out and raise private money and had to go out there and own and operate the property. I am going to, my private money tutorial in the Elite program is going to take you through all of the nitty-gritty of what it's like to get out there and raise money and what you need to do every step of the way, and how to become that syndicator. So yes, the Masterclass Elite program with the private money tutorial section is going to take you right through that from soup to nuts. Okay? It's going to have all the documents you need. It's going to have the offering memorandums. It's not going to have the private placement memorandums. I mean, I don't want to be giving out legal documents that you think you're going to cut and paste and copy. You really do need to have a securities attorney on your side doing that work for you to make sure that it gets done correctly. All right? So, so that is, the private money does get done that way. That's how you're going to learn that. Let me see if that's okay. Let me see. Okay, I think I got pretty much all of them answered. And as usual, guys, if you have any questions, if you're in the program, you can just shoot me an email. And you know, sometimes your questions will be put up on the expert Q&A section. I got a couple of questions in this month's Q&A that are really good that I got from some students over the course of this past month. And if you want those questions answered, just shoot them in to me, and we'll get them up on the site. So I think that's about it. I don't want to. I'm at your service here. But if there are no more questions, I don't want to waste anyone's time, and we'll just sit here and look at each other. So I hope this was a good call. I hope you got a lot out of it. And you know, the number one rule I can tell you out of this whole thing is don't believe anyone tells you. Don't believe anything anybody tells you. Question everything. Get the backup. Use your rules of thumb. Don't believe what the brokers are telling you, and then make an offer that works for you. So hope this was helpful. And you know, now the person on this call who had this property analyzed, take what you learned here and apply it to that other property that was on that email that you sent me, and see how you come out. Do exactly the same thing, and let's see how it works. All right, everybody. Hey, thanks for being on the call. We'll talk to you in 2 weeks, and I look forward to it. Talk to you soon. Bye, everybody.